Hi, and welcome to today's Impact Seminar. Today we will look at the impact category of the investment world. I will try and make a framework. I will try and explain what it is. I will try and give our arguments why we think that this is maybe a category that could outperform in the future. We see a lot of arguments that more capital will deploy it into this space of the investing world. So that's to start with. Afterwards, we will present 8 companies which has a business model who inherently gives advantage to society, which is some of part of the the impact investing category. A lot of times when you start such a seminar about impact, you always start with this notion that you should always, the misconception that you need to sacrifice returns from being good or doing a difference in your investment. I actually don't think we need to do that so much, because I think more and more people are seeing data that there's actually no sacrifice between returns and actually doing some difference with one's investments. More and more data set are coming in that there's no sacrifice of that. So I will start by giving this start presentation, and later on we will watch the presentation of 8 companies who we think falls into this category of the impact world. You will be able to see the timetable here to the right, and when the companies will present. To start with, it's always nice to have some kind of a definition, and we are in an early category. We are something where we don't have a framework totally set, but in essence, it's about impact investing. It's about deploying some capital or doing a difference that brings out some social desirable outcomes to the society. And it should also be measurable, because in investments we always want something measurable. But it's a two-part, because it's also with the expectation of a financial return for the people deploying their cash in companies or in investments. So it's a two-part. You need to have some desirable outcome to society, measurable, and you need to have some expectation for financial return. If we should kind of look at how the investment world has evolved and maybe a journey it's on, we have this return focus only. It has been the paradigm for the last 100 years that the return is the only objective of your investment. That's creating attractive returns to investors. Then lately, in the last couple of years, we have seen ethical and ESG, this ecological, social, and governance coming in. Ethical being the first part, which was avoidance, meaning that we would strip out some companies of our investment, like the coal industry, like the weapons industry, and etc. So the first part of this journey we have been on has been the ethical. Then we have gotten the ESG, where we are forcing kind of companies to try and minimize risk from environmental, social, and governance issues, having the companies reporting on it. So we as an investors can see how they're evolving, and slowly we are seeing, the companies going in the ESG world from, do less harm to being zero emission and so on. So that's kind of the involvement, and that's the big part we have seen the last couple of years in the investing world. But it's still do no harm. It's still the neutrality. It's still not making a difference. And that's why impact investments is a step further. And here we are saying actually make a difference. It should be measurable and it should give you returns. But here we are in this category where it's not enough not to do any harm, not to try and get to the neutrality, try not to do anything that impacts society and such stuff, but actually helping society to lift itself. And then we have the last category, which is not that relevant for today's, because we are investors. That's this charity, which is kind of make a difference, but with no direct returns from the investor side, but of course, maybe more for the society side. We should look at this timeline. We will also see investor journey. I could draw that in as a timeline. Investors has gone from return focus only, ethical, ESG, impact investments, but they are nowhere near. Especially the big US investors are only starting to dig into this. European are a little bit further, but it's expected that maybe 30% of the investment world are looking at that. So that's a huge part. You could also see it as a framework where, return focus only, we have a very good framework for measuring that. Then we have the ethical. We also had kind of a good framework for saying a lot of companies made up who companies should we avoid. Then the ESG, slowly we're getting a framework where we are getting some kind of reporting measures. But the impact investment still is in a very early stage, and you might say there is not a very strong framework coming there. So the framework and the investor side, we are moving, of course, in a slowly pace, but we are moving towards this. But if you should look a little bit at the frameworks, which is possible for this and is used when impact funds and such one, is we have the UN sustainable goals. And here we have all those 17 goals. If we make a difference on one of those goals, you might say you are making an impact on society. So that has been used for a lot of years. But maybe more interestingly, I think, is the EU Green Deal, the taxonomy. I have made a misspelling there, of course, where we soon will get a framework for saying what is actually a green investment, what is an impact investment, and this is primarily going to be in the green world, but also a little bit broader to do the green transition. Simply to saying that we will define what is a desirable outcome. We will define what is actually something that makes a difference, and we will make measurements. And it's expected when it gets into legislation later this year or maybe end, that up to 20,000 European companies size-wise will start to have to report on this one. So it will be a framework that you can deploy in the future for trying to find out what is investment. But I'm by no way saying that we are having a framework. I'm by no way saying that the politicians has taken a steps to make some kind of framework that it will be ideal from the start on. That I think I have lived too long to believe in. But at least we are starting to make some frameworks where we can put those investments in. And as soon as we get a framework, we get a much better category or definition for this impact investing. But that doesn't mean that we haven't seen it. We have a lot of funds who are making up their own measurements and such stuff and slowly moving money in. We are seeing, especially in this ESG world, that both passive and passive flows into this category, but also investors moving into it actively and trying to measure it. So we are on this travel, and in the investing world, it's very, very simple. Inflow of money will mean in some way that the share price appreciation. Just looks at the last 12, 40, 13 years of the digital revolution and where the money has flown in. It's somewhere where you get the most of the returns in the share market from. But let's look at the next changing. But why do we actually think that in the future there will be we see a strong case for increasing inflow into this category? But the main reason is that it looks like we are in a paradigm shift in the economic world. I think that in the future we will shift from monetary to fiscal policies. Stimuli and such one will take over. We will see much more of the economic growth driven by deploying fiscal policy. And what does that mean? But if you move to a fiscal policy, you will have to have much more desirable outcomes of your investment into this society. We are looking at the green side, and it's important to say which politicians will clearly be moving a lot of the fiscal stimulus to. But it's very clear to say that the impact category is not a green transition. It's a broad one where we are seeing social impact. But if we are moving from a more direct way to where we want to fund our money than the indirect way of just letting a lot of money out in the world and hoping it finds investment, then it's clearly going to be that the more is going to be spent on something that has a social desirable outcome for the society. Or at least that is what we should expect from our politicians, but I also think we will see. And of course, it's a part of the corona, probably. We are a little bit more, samfundsborger in Danish, that we are looking a little bit more with clear eyes on that and accepting that's the way we drive our. The other way is that there's clearly a population behind the politicians. The policies can change, politicians can be thrown in and out. It's always dangerous to hinge too much to a politician side on your investment side, but it's a broad journey all over the world. It looks like the population are behind the politician, meaning that it might not differ that much which politicians are at the helm of the steering. So I think that's also something. We are also protected by that. Companies have finally taking a stakeholder approach, whether it's because they think they will give them the best investments return in the future, I don't know, but they are finally taking a stakeholder approach, looking a little bit broader. I always use this PepsiCo, who to see how far they are going, which is the largest chips producer, so they of course need potatoes, and they have actually done the hippie wise and where you cultivate and looks after the earth. They are now investing into their suppliers and trying to cultivate and using those hippie ways to try and preserve the earth and thereby capturing more CO2. So you're really seeing abroad, I think it's 75% of the C25 companies who are going to zero neutrality emissions in 2030. So you are seeing also companies going behind. Then, of course, I mentioned the taxonomy, greenwashing. The way a lot of big industrials and where the very expensive CO2 has been kind of looked at and tried to remove is actually buying quotas and such stuff, and companies in the future will have a much harder time when we get a framework what is a green investment to greenwash simply, where they are saying they're doing something but they're really making no impact. It will be much harder in the future, meaning that real money will be deployed into those categories of the investment or the economy. The companies will be forced to that, and that also means that companies that deliver those benefits or green transition technologies and such stuff will probably see a rise in buyers and potential clients, because it will simply not be possible for bigger companies to try and go green. And on the investment side, which is also a part, is that investors will be regulated to provide information to clients. They actually, by this taxonomy, will have to give this transparency on saying how much damage does our portfolio or the client's portfolio give to society, which is part of the taxonomy. So this is, and then I always said that this is not about us sitting down on a bonfire singing songs, and we are not going hippie in the investment world. It is via money, via big money, via BlackRock moving to this, and so on, all those big investors. It's simply to avoid risk. In the investments world, there's two big factors for it. How large will how much will this industry or sector grow, and avoiding risk. And the risk is a big part of valuing a sector. And there simply looks like there will be less risk if you are going green, if you are going to a impact investment or a company who does that, because simply you can have polluters. How expensive is it going to be in the future to be a polluter? How much pushback can you get from a public opinion if you are not a social responsible company? So that's a risk that if you look at two, say, of the same type of companies right now, they earn the same, they will get the same valuation in the stock market, they do the same. The one which has a journey in front of it where it will go this way will be valued higher because it has less risk in the future. And what do I mean by less risk in the future? I also have investors saying, yeah, but this is worth. But if you want to trust the numbers, this is the carbon emission future, which you trade. And yes, it has been manipulated and such stuff. And yes, is it a part of a speculative wave into some things? But as you can see here, we have seen almost a doubling from the historic highs lately. Yes, there's probably some speculative, but it's also a signal from politicians because what does this actually show? It shows the way that companies, if I'm a polluter and I know I don't want to do anything the next 40 years, but I think that there's a risk that this will be expensive to me, I can actually hedge those 40 years by going out and buying those carbon emission futures, right? So it is companies also seeing the risk, seeing that this is the way society is moving. So I want to see hedge my risk. So there is a larger demand for those ones and that is a sign that pollution probably in the future is going to be much more expensive. That politicians will move that way. So that is what you can read out of this. Yes, it's also about how much can you get a free ride and how much is politicians giving away of those. That's another part of it. How is the technology getting the price down on taking out CO2? But I think the signal here is that even if you as an investor should look at it, yes, there is a sign that someone is looking with higher risk in the future and want to cover that there's going to be a price for polluting in the future. And to end with, the question I always get when I say people should look at this impact investment category, not only as a way of getting better returns, can you actually make a difference as a investor? I'm just buying a company share that doesn't move anything around, and that's not in my world true. But of course it takes time. But I think the biggest example I have right now is that oil companies for 15 years has ignored this, and what have they looked into? A multiple going down. Nobody wants to pay anything for their earnings. You're sitting in your boardrooms, you have your share options, and they have simply not moved anywhere in 15 years. And now they understand the message and now are going greenish by saying we will deploy all the money we take out from the oil and deploy it into the green development and trying to create another story. Whether they will follow up on it, I think they will, but it is a way to see that yes, by moving money around, by trying to make a difference as an investor, you will also be able to do this. So I hope this gave kind of a framework why we believe that in the future you should look more on this impact investing category. And now we will go to the companies presenting in a short while. I think the first company will be Hydract, 8:55. So let's take a short break here, or you can ask questions in the time to my presentation or arguments against my case.